Welcome to today's episode of the Best of Raleigh. I have got an awesome guest with me that is a family friend, business partner, all kinds of great things. Ryan Darge is with us from OriginPoint. OriginPoint is the premier mortgage lending company here in the Triangle. They're actually all over the country, I guess, but Ryan is here in the Triangle. And we're going to talk about all things mortgage, wealth building, rates, the things that are on your mind, which is not typically what we do on this show. However, this show is about introducing you to the people and the places and the businesses that you need to do business with in the Triangle. And Ryan, thank you so much for joining us on the show.
Thank you for having me.
Welcome to the Best of Raleigh with your host and real estate expert, Gretchen Coley, owner of the Coley Group. This show is all about the people and places that make the Raleigh area so special. Here's your host, Gretchen Coley.
Yeah, I'm excited to chat with you because obviously I don't know when this is going to air, but rates went down yesterday, right?
Yes.
And I'm sure that is what is always on everybody's mind, whether they go down yesterday or 6 weeks ago.
Right.
Let's talk a little bit about what happened with the Fed yesterday.
Yeah, so big day yesterday, right? We had a 50 basis point rate cut with the Fed. You know, what does that mean? I think there's a lot of confusion surrounding that, right? And so what it doesn't mean is that interest rates came down by 0.5%, right? That is not the case.
Interest rates or mortgage rates?
Mortgage rates
Okay.
come down by 0.5%. So what it does mean is the Fed funds rate has been dropped by 50 basis points. And what the Fed's fund rate is it is basically the short-term rate that banks charge each other overnight to maintain their reserve requirements, right? And so when that drops, it is really directly tied to more of your short-term loans, like your credit card interest rates, home equity lines, things like that. And also the stock market. And as a lender, we obviously look at the stock market to determine where rates are going to go, specifically the 10-year bond market and the mortgage-backed securities. We want the bond market to go down and mortgage-backed securities to go up. That always yields good rate days. So yesterday, the market was pretty muted as a result of the rate cut. There wasn't really much change at all. You saw kind of an initial dip, and then things kind of leveled out and came back up.
Well, I think most people, it was kind of already priced in, right? Bond traders are some of the smartest people on the planet, if we could just say that. And that 10-year bond is what mortgage rates are attached to.
Correct.
And so that 50 basis points was already kind of factored in by the market. So we didn't see a huge change. However, some of the guidance that the Fed gave for the rest of this year and for next year is something that's really exciting to me.
Oh yeah, it's the statement after is always what we really kind of hinge on, right? I mean, the decision is important, of course, but the Fed statement was basically what we're expecting is another 75 basis points throughout the rest of the year for 2024.
This year.
Yes. And then next year, 2025, we're expecting at least another 100 basis points, right?
Do you see the smile on my face just getting
yeah.
bigger and bigger? You might not be able to see this over the podcast, Apple Podcast or Spotify, but I'm kind of talking like the smile is getting bigger because that is a huge, huge decrease if that does happen.
Yes. Yeah. I mean, it's time will tell, right, where things go. But I think what we've seen over the past 2 months is a steady decrease in rates, right? And so what we're going to see is that continue. I don't think we're going to see big spikes when the Fed meets. I just think over time, as we anticipate the rates continuing to come down, we'll see a steady decrease in that.
So what does that mean for a home buyer?
Honestly, what it means for a home buyer is it's time to look at what you can afford, right? And the reason why that is because as these rates continue to go down, what's going to happen is the demand for housing is going to increase, but the supply is going to stay the same. You can always change the terms of your loan, but you can't change the price that you pay for the house. So it's important to find out what you can qualify for today and find that home.
So where are rates today? And then I'm going to ask you a couple of other things because I've got a few things I want to dive into you. But where are you seeing rates kind of falling around right now?
No, that's a great question. So this morning I did a pre-approval and priced out at 5.99% on a 30-year fixed conventional loan.
Amazing.
Yeah. It was
amazing.
exciting.
That makes me so happy. And it makes me happy for a few reasons. Not because this is my business, obviously, because here's the deal. And this is what you don't necessarily hear on all the social media platforms. People buy and sell houses because of life changes. They don't buy and sell houses because of mortgage rates.
Right.
They don't buy and sell houses because of like all of those external factors. They do it because something in their life is moving them to. I've never met one client who was a homeowner who decided to sell his house or her house to take the equity from it. they got to live somewhere. So contrary to what everybody thinks that real estate agents are salespeople, we help people and advise people to make decisions that affect their life and improve their life and take them to the next chapter in their life. And mortgage rates certainly will make people pause, but they don't stop. It doesn't stop the cycle because people die, they have babies, they get divorced, you know, they have all of those things that happen. And in the Raleigh real estate market right now, we have less than 2 months of inventory supply. That is with rates in the 6s. When rates were in the 7s, we had 2 months of supply. When rates were in the 3s, we had 0 months of supply. So when they were in the 4s, we might have had 0.5 months of supply. And I just tell you all that to say, listen, we are in an inventory crisis when it comes to home ownership, a crisis. And there are a couple of factors that are affecting that. Number one is people not wanting to sell because prices have appreciated in our market in Raleigh and rates have increased. So for them to trade the same house size, they're going to have to go up in payments, sometimes $1,000, $2,000, $3,000 a month to get the exact same house because of price appreciation and because of rates. So when it comes to interest rates in the 5s, in our market, that's significant, right? That means that the people who have been locked in and felt like they were locked into a mortgage rate now feel like, okay, if I'm in at a 3 or a 3.5, 5.5, 5.75, 5.99 doesn't feel so bad, right?
It's
reasonable. Is that what you're seeing?
Yeah, it's definitely reasonable. I mean, yesterday, just right off the bat, I mean, my phone was going off the hook, just questions about refinances or, hey, I know we're pre-approved. Can we check what rates are today, right? It's something with a 5 in front of it is exciting because all we've been hearing is 777, 666, and now it's 5, right? Officially, you know, in most cases. So it's exciting. And as things continue to come down and hopefully into the 4s, that's just going to drive it even more.
So I want to talk about affordability and I want to talk about building wealth through home ownership. And you and I have known each other for a long time. I knew your wife since she was a little girl. Yes. Hi, Devney. And it's been a really cool thing for me to watch you grow into this. But before we go into the other 2 questions, I want to just talk about you a little bit. Tell us about yourself. Tell all the followers out there who you are.
Yeah, so I mean, currently my official job title is Senior Vice President of Mortgage Lending and Producing Sales Manager. Yes, it's a nice title, but I've been in the business now for close to 10 years. I started out of college as a police officer, actually, with Greensboro Police Department. Did that for a short while, of course, and my mother at the time was an office manager at a mortgage broker. And she said, hey, you have any interest in getting into the mortgage business? And at the time I was like, sure, right. Let's see what this is all about. And I say the rest is history, right? I went and shadowed a loan officer, really enjoyed it, and started out kind of in the broker world, and then moved from there into the banking world for about 6-ish years. So just doing mortgage lending for a bank. And then I finally got to a point where I was just wanting to be able to offer more from a product perspective. And I was really kind of boxed in with the bank world. And I just felt like I needed to spread my wings a little bit. In steps Gretchen Coley. That's right. And so Gretchen was very instrumental in this happening. And I think the exciting part about all this is just being able to do more, offer more. In the first couple months of me being here, just absolute tremendous growth has occurred compared to where I was at in the banking world. So super exciting. Been in Raleigh for a couple years now. My wife's family is from Raleigh, so we've always visited here, and we finally now live here. Our son is turning 3 tomorrow. Wow! Happy birthday! Thank you. I will let him know. He's so cute. He's adorable. I might be a little biased, but you know, right when he was born, we made the move up here. You know, we needed some help, and you know, live in North Hills just down the street. So we absolutely love being here in Raleigh. It's a great place to raise a family. It really is. Yeah. You know, it makes Raleigh is so special because of so many things, but being safe,
being affordable, and just the people here make living here so cool, right?
It is.
It's a great place to move to for all of you out there listening.
Yeah.
So I want to talk about housing affordability, because rates do affect affordability of housing. And I think we can all agree that housing affordability is something that millennials and Gen Zs feel like is slipping away from them. The average age of a first-time home buyer reported by NAR, and this gives me chill bumps because I can't even stand to say it, was 35 years old. There is a lot of wealth lost from the time that you're 25, when you could possibly buy a home, to 35, that you're just not accruing. And so now that rates are starting to come down, that's going to change affordability a little bit. But you've hinted to it a little bit as well, that when rates start to come down, prices start to go up. So what would you tell someone who doesn't own a home right now in Raleigh as to, what they should be thinking about and why they should consider becoming a homeowner?
I think what I would tell them is start small, right? I mean, I think, for a first-time home buyer specifically, I think a lot of the times you'll see folks just have this image of this dream home that they want right now, right? And then once you have a conversation with a lender and a realtor, you realize, well, that may not be reasonable or affordable right now. And what the conversation that we have as lenders is, hey, we need to start here and allow this home to build into the next home, and so on and so forth, right? So maybe a townhome, right? Maybe something that's a little bit more feasible to start out with from a monthly payment perspective. If you're living by yourself, or maybe have a spouse or somebody, get something that is not outside of your means, that's at a reasonable price point that you can afford, and just maintain that, right? And allow that equity to build. And then when you're ready to kind of take that next step, you can use that equity to then buy the next house, and then take your original house and turn that into an investment property.
Let's talk about that equity, because I think a lot of people who are Gen Zs and millennials, I am not, I'm 49 years old, so I think I can probably be your mom. But a lot of people feel like the cost of home ownership are not worth it. When they add all the numbers up, they say, okay, well, I can rent this apartment or this house, and all the taxes are already in there, the insurance is already in there, I don't have to worry about any of that, and I get all the maintenance and such covered. And that is a real thing.
Sure.
But the thing that you're not seeing is the appreciation that you get and the leverage return that you have. So if you're buying a $400,000 townhome, you put $50,000 in, you borrow $350,000 from the bank, you get leveraged appreciation, meaning you get to make money off of your money and the bank's money at the same time, right? And so when you combine those two together, and then as a single person, you can take a $250,000 tax credit on your equity gained if you lived in a primary home for 2 years, $500,000 as a married couple. Right. Think about how long does it take for somebody to save $250,000, right?
Yeah, absolutely.
So it's a great way to take it, walk away, put it in a new house. And I'm with you, Ryan. If you're sitting on the couch or sitting on the sidelines waiting for a home, waiting for your dream home, you are missing the big picture. So I would challenge you to get with someone like Ryan, like myself, and let's run the numbers for you and help show you what that looks like. Because the people that you see that are buying all these $2 million houses in Raleigh, it's not usually their first house.
Right.
It's usually their sixth or seventh house that they have rolled equity, right?
Absolutely. And we have the tools that can really visualize this for you, right? So it's easy
Let's
to talk
about tools.
Yeah, I mean, it's easy to talk about it, but it gets confusing at a certain point when you're just having a conversation. When I can put it in a graph and show you trends and compare what you would be buying in a home to what you're paying now in rent over time, it really just spells it all out for you, right? And so the tools that we have that we're able to utilize are what are extremely helpful now, especially when talking with first-time buyers, because they need to see it visually. I think it's super important. So we have that stuff.
So what would you say for the people who feel like they missed the opportunity? Because we have had massive appreciation in this market since 2019. So I was actually at the dentist yesterday, and I talked to this sweet, sweet girl. She's getting ready to turn 30. She's living in an apartment, been living there for 3 years, and she's like, I just kick myself because I feel like I should have bought 6 years ago and I didn't. Right. And what would you say to that person?
Well, the next best time to buy is now, right? And so obviously we can't go back 6 years ago and recreate history, but it's okay, right? We all make the mistakes, and it's not necessarily a mistake. It's just the opportunity was different then than it is now, but it's still here, right? And
I agree.
so just looking at what you can afford now and try not to compare it to what it was 6 years ago. Just look at what you can afford now and just start building. I mean, what's the phrase, like to plant a tree 20 years ago is the best time to do it, and the next best time is now, something along those lines. I mean, it's the same concept with this, right? You need to take a look at what you can do now and just get an idea of what's comfortable for you and what's important to you, and just start building. It's never too late.
Right. I agree. So when people call you, when you have a first-time buyer or someone who hasn't bought in a while, and they're calling you and you're running the numbers, walk me through that process so they know what to expect.
Sure. I mean, I think the best lenders listen, right? And so what I like to do is just ask questions. I say, look, what are you looking to accomplish with this purchase? What type of home do you need, right? And that's a conversation I have with an agent, of course, but I like to know that too, because that kind of puts me into a price range that I can think of. Okay, mortgage programs, how is this going to fit the bill? So I ask a lot of questions about where's your credit score, how much do you have set aside for a down payment, which you don't need as much as you think, and you don't need to have as stellar credit as you think, and just what's your time frame, right? And we just basically have a conversation, and based on the information they give me, I say, okay, well, this is an option, this is an option, this is an option. Let's go ahead and have you fill out an application. Let me take a look at everything and just see what some products are out there that may be beneficial to you. Do you need some down payment assistance help? We have that stuff.
Let's talk about that.
Yeah, we have down payment assistance programs that can help, right? So one of them is NC Housing. We also have a national down payment assistance program that we can look at as well. A couple of different grant options, and just in general, low down payment options, to begin with for first-time home buyers. So there's a lot of different things that we can look at. I think there's this huge misnomer out there that everyone is supposed to put 20% down to buy a home. That's not the case. That's not the case at all. Okay, FHA's 3.5%. Minimum, conventional's 3%, USDA is 100% financing, and if you're a veteran, 100% financing on the table as well. And then we also have the down payment assistance options. So if out-of-pocket expense is a takeaway point for you and you're very concerned about it, we can talk about that and figure out some solutions. And with the rates coming down, of course, payments are getting better and better and better. So this might be a great opportunity, and just walking someone through that and taking the time to have that conversation is super
I think that's so important up front, is really listening and understanding what they're trying to achieve, because I feel like we get very short-sighted with what we hear on the internet, right? With what we hear on Instagram and TikTok. And oftentimes you're hearing that from people who are not homeowners.
Right.
They don't understand it, and they want everybody else to be just like them, and they want everybody else to understand why they made the decision they made. I am a firm believer that home ownership is the way to safety, security, wealth for your family, financial stability, as long as you have a job and you feel like, you're going to be able to be employed, you're going to show up for work, you're going to do all the things that you need to do. Like, I think home ownership is the way, and especially in this market. So what are you seeing in this market from a lender's perspective? What are people saying to you about buying in Raleigh, living in Raleigh?
Yeah, I mean, as far as what they're saying to me, I mean, it depends on the stage that they're at in life, right? I mean, for your first-time home buyers, they ask questions about, hey, where is a good place to, buy my first home, maybe potentially raise a family, and then we talk about the second home. Somebody who's coming in from out of town, I mean, it's a different conversation, right? It's like, hey, this is my price point, this is where I want to be, where do you think, is best? Talk about loan programs related to some of those higher price points. So there's different conversations happening all over, but the one thing that is consistent is people really rely on us as professionals to give them the correct information. And so the partnership between you and I, or a lender and realtor in general, is super important, because we're able to kind of back up what you say with the financing, right? And put that all together as
well. And I think those trusted partnerships, you make a great point, Ryan. Trusted partnerships are really important, because when you have people who work as advisors, which is what I believe we both do, that changes the playing field a lot. You don't have someone who's trying to sell you something like, we are trying to make clients for life. We want to be your real estate firm forever, for this house, the next house, the next house. And for now we're starting to sell the family's kids, their houses, which is awesome. You can't do that if you're helping people make decisions that aren't fruitful for them. So really having people who can help guide you through the process, help problem solve, is really a key. And in our market, having a local lender is really important to winning because it's a competitive market, right? When I send a pre-approval letter with your name or one of my trusted partners' names on it that's local, it's a whole different ball game than when it's a internet mortgage company that nobody knows, right?
Absolutely. It's so nice being able to physically grab somebody if you need to and be like, you know, and it's for y'all too, as real estate agents, knowing who to call. It's 9 o'clock at night. I need a pre-approval. Am I calling the assistant, the underwriter? Who am I calling? You're calling me, right? And as with anything in this business, the relationship is so important. The relationship between me and you, the relationship between us and the client. That is what it's all about. I mean, and if you don't have that, you're not going to do well. And I think it's so important to hear that story, hear what people are trying to accomplish, and listen and provide a solution.
You know, it's funny. I have a story. So yesterday, I got an offer on a condo in a building that is a non-warrantable building. I know that you cannot get a conventional loan on it. You cannot get an FHA loan. You cannot get a VA loan. A buyer comes in unrepresented, no agent, and submits an offer on this property with a conventional loan pre-approval and wants to negotiate. And so the first conversation we had is, hey, can you give your lender a call, make sure they have the address of this building, make sure they've looked into it, because I don't know that you can get a conventional loan on this, and I want to make sure of that. She calls me back and she's like, oh my God, you're right. And I said, you know, I'm so sorry. I'm happy to hook you up with someone. I'm happy to make an introduction to our trusted partners, but there is a lot of risk. Any other agent could have just said, you know what, check, let's take your money, and your due diligence money in this state is gone once that contract is signed, and you can't get it back. So there's inherent risk in not giving a full picture of information to a lender or to an agent, and really going in rogue is a scary thing. So what advice do you have for the listeners out there that are thinking about making a move up? They're in a house right now, 3%, rates are coming down, they've been waiting, and they're ready to move. Maybe they can't sell before they buy. Do you have a program?
Absolutely.
Or can't buy before they sell?
Yeah, absolutely. We have a couple of programs that we could actually work out. So we do a standard bridge loan, of course, so we have that option, which is just, again, causing you to not have to sell prior to moving into the new home. It's one loan on two properties, essentially.
Yeah, it allows you to go ahead and move into the new house, get the old house ready, sell it. You don't have to make the kids' beds. You don't have to clean your sink, any of that stuff every morning before you walk out the door.
Absolutely. We also do an in-house home equity line, so we can tap into some of the equity that you have in the property to be able to utilize that for a down payment if you're able to qualify for both of those loans at the same time. We also have another option where we will not count the departure residence payment against you when qualifying for the new home. A couple of criteria have to be met there, but we have a number of things at our disposal that can help when transitioning from one home to the next and only wanting to move one time.
And most people don't know about those things. So I would say if you are in that situation, you're like, how am I going to get this house ready to sell so that I can move to the next house? Give us a call. We'll be happy to help you. Well, Ryan, thank you so much for all of this. Where can they find you?
You can find me on Instagram at Ryan Darge MLO, and I am here in Raleigh locally, 4208 Six Forks Road. Give me a call, and my phone number is 704-928-6866.
And we will link all of his information below. Again, he's with OriginPoint. You're going to get great service. You're going to have a great experience, and you're going to get great advice. And great advice in this industry is priceless. Thank you so much for joining us on today's episode of The Best of Raleigh. This is where we introduce you to the people, the places, and the businesses that you need to do business with in Raleigh. And if you're thinking about making a move to Raleigh, we want to be your concierge level real estate firm. Reach out to us to help you make a very smooth move into this market or around in this market. We'll be there for you every step of the way. You can catch us every Friday on Apple, Spotify, and YouTube, and we'll see you in the next Best of Raleigh.
Thank you.